Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
Veterans benefits just got a whole lot better. Whether you're about to leave the service or you've been out for decades, the PACT Act gives eligibility for VA benefits to thousands of veterans. The PACT Act is a new law that expands benefits for veterans exposed to burn pits, Agent Orange, and other toxic substances. To learn more, visit va.gov/PACT or call 1-800-MY-VA-411. If you or a loved one served this country, it's time to get the benefits you deserve.
Life estates are not simple documents and can carry risk, including the potential for you to lose control of your estate. If you haven't done your planning yet, call Cushing & Dolan at 866-848-5699 and get your free copy of their new guide called Calculating the Consequences of Life Estates. Call 866-848-5699 or request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a guide available this month titled Understanding the Secure Act 2.0. Mike, one of the provisions in here allows individuals to actually move money from a 529 plan that was supposed to be used for college into a Roth IRA for the beneficiary of the 529. How does it work?
Yeah, so this has been a common concern for parents out there is what if I over-contribute to a 529 plan, then I've got a bunch of money stuck in this account that I really can't touch until maybe I have grandchildren or some other scenario. And the Secure Act 2.0 attempts to solve some of that here. They've already changed it so you can use it for secondary education such as private high school and things like that. But this is a specific provision that allows you to move money from a 529 plan to the beneficiary and in the form of a Roth IRA, so long as certain conditions are met. One, the account has to have been open for 15 years or longer. There's some limits to how much can be done in total over the lifetime, $35,000, and the traditional Roth IRA contribution limits do apply. So only one calendar year, $6,500. They must have earnings to be able to do so. But this is a significant change, and really, in my view at least, solves a lot of the problem and concern about overfunding a 529 plan.
Our guide this month is titled Understanding the Secure Act 2.0, and there are two ways that you can request it. The first is by calling 800-393-4001. The second way to request it is by going to ArmstrongAdvisory.com. That number again is 800-393-4001, or you can request it at ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The United States Virgin Islands and Sports Illustrated Swimsuit have partnered for the second year in a row to give away a luxury trip for two to America's Caribbean paradise. The winner can choose either St. Croix, St. Thomas, or St. John. And the trip includes airfare from the continental U.S., 4 nights hotel accommodations, ground transportation, and a private photography session. The contest runs through February 13th, with the winner being announced on February 20th. Each island offers incredible experiences, from world-renowned scuba diving on St. Croix to the most pristine beaches in the Caribbean on St. Thomas to picturesque harbors and beautiful snorkeling on St. John. From the moment you arrive, you'll find yourself falling naturally in rhythm with the heartbeat of the islands because the weather is perfect all year round. There's no money to exchange and no passport required. Go to visitusvi.com for more information and to enter the contest. That's visitusvi.com. Life estates are not simple documents and can carry risk, including the potential for you to lose control of your estate. If you haven't done your planning yet, call Cushing & Dolan at 866-848-5699 and get your free copy of their new guide called Calculating the Consequences of Life Estates. Call 866-848-5699 or request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
It is a big jobs Friday here on the Financial Exchange, and the reason that I use the word big is because, by all accounts, this was just an absolute monster of a report and is confirming, in my opinion, some of the other data that we've seen thus far for the month of January. It is Chuck, Mike, and Tucker with you today, and let's start right from the top. 517,000 jobs created. The expectation, Mike, was for
187.
Yeah. So great. Huge number. Other pieces, okay? And again, we'll just go through some of these other items that are in here. We also saw that the unemployment rate ticked down to 3.4%.
Which, for anybody counting, is the lowest in 53 years.
Since 1969. Bust out the Bryan Adams. That's what we're talking about here. You got to go back that far to find the last time unemployment was this low.
I'm sorry, because anybody that's watching on the live stream saw that I just sprinted in here, so I don't have my computer, Chuck. Do you know what the labor force participation rate was in 1969? I don't. I'm asking you because you've got your computer in front of you.
I do. What part of 1969 would you like?
I don't care.
You don't
give me an average.
You don't. Well, I don't have an average.
Give me
a
roundabout. It couldn't have fluctuated that much in 1 year, could it have?
Keep in mind, labor force participation is skewed back then because there were a lot of women that were not in the workforce. So in 1969, it was between 60 and 61%.
Right. So my point, however, is that we are looking at, I guess you had a younger population then too.
You had a younger population too, so it's kind of it's apples and
I'm
ham
trying to
sandwiches.
compare 3.4% today to 3.4% in 1969. I guess what I really might be needing to look at is the employee to population ratio. But in either case, 3.4% in today's context is an incredibly low unemployment rate no matter which way you cut it.
Yeah, I mean, I think that employment to population ratio, let's look at that because that is, hey, especially that prime age, age 25 to 54. What are you seeing in terms of who's actually participating and, who's actually employed and who isn't? That, I think, is where the real meat is. So the peak that we got to on this number was around 82% during the tech bubble. Mm-hmm. After the financial crisis, we got down to around 75%. So only about 75% of people aged 25 to 54 had a job. Prior to the pandemic, it got up to 80.7%. Okay, that was at the end of 2019. That was the highest that we reached in that cycle. We're back up to 80.2 right now. So think about how hot everything felt just before the pandemic, and you're getting pretty darn close to that right now.
Yeah.
Okay. The other things that we saw yesterday that confirmed this, unemployment claims continue to drop. Continuing unemployment claims continue to drop. So, again, this is something where all of the employment data says the economy's firing on all cylinders. When you look at where the jobs are being added, construction, still adding 25,000 jobs this month.
In spite of the fact that anybody that works in the space is saying that hell has frozen over and the world is coming to an end, still adding jobs month after month after month.
Manufacturing up 19,000 for the month, accelerating there as well. Across the board, big bumps there. The other piece, okay, let's talk about wages. So average hourly earnings only jumped by 0.3% this month. So everyone's, waving, the towel saying, yeah, average hourly earnings aren't going up that much anymore.
They came down from December, 4.4% year over year versus 4.8% year over year. But a reason for this was that the average work week, as reported, increased by a third of an hour, which is a huge jump in average work. Like, you don't see this. So the net effect on this is that aggregate payrolls actually, the number of jobs added times the additional hours worked,
up 1.2% for the month, which is freaking scorching.
Yes.
Okay. Now, here's the caveat on all this. The January data series is always the most volatile out of any jobs report that we get because they basically do all of the adjustments for population growth for last year now that they, have a full year of data there. And so these can be really, really volatile. So this is not something that you necessarily look at and say, oh, this is how it's going to be going forward. But what I will say is, hey, the last 3 months now, when you include revisions, 290, 260, and 517,000 jobs added. Okay? Things are humming. Things are humming right now. So, because of all this, what do we have going on in markets today? 10-year Treasury, just a day and a half after you saw it go from 3.54 down to 3.4, it's back up to 3.55 right now. Yeah. Okay? Why? Because if you're not having a recession, the Fed doesn't need to cut interest rates. That's the base of it.
Right.
Okay?
Which is being priced in for the latter half of next year and certainly by this time next year.
And by the way, lest you think that this is, the government's just manipulating all these statistics and, this is, not real. Car dealers yesterday, not car dealers, but car manufacturers who are not owned by the government, they reported an almost 20% monthly jump in vehicle transaction volume for January. Okay? You had the ISM Services Index come out this morning. Again, the ISM is a private entity. Doesn't work for the government. We had the hottest reading in 2 years on ISM Services, coming in at 55.2 versus expectations of 50.6. That's also a reacceleration from a 49.2 reading in the prior month. There is a reacceleration happening in the U.S. economy right now.
I am beginning to think, and we saw this confirmed based on some December volumes in the housing market, but I am starting to believe that we're heading for a pretty hot housing market.
And this takes me right to where I've been leaning, and now I'm leaning more strongly, which is the biggest risk to the U.S. economy this year, in my opinion, is no longer recession. It is that the reacceleration that we see, not just in the U.S., but in China and in Europe as well, causes a second bout of inflation, causing rates to have to move higher, which puts stress on equities and bonds once again. I know that this has never happened before, but everything has never happened before until it does.
Sure.
It's just how it is. Like there's a first time for everything, I believe, is the more graceful way to put that. This may be the year where you see stocks and bonds fall for the second year in a row for the first time.
Never happened before.
Never happened before. We've never seen back-to-back years where both stocks and bonds in the U.S. have been down. I don't know.
It would be quite the reversal given what things have done in January, but yeah.
Yes. And again, I don't know that it's – I'm not saying this will happen, but if you see this acceleration turn into inflation rearing its ugly head again, then you've got some more pain coming on both of those because the 10-year Treasury that right now is sitting at 3.5, again, if the Fed's got to take rates to 6 or 7, you think you're just going to spend the next 10 years averaging 3.5?
Right.
It's a tough putt. And on stocks, hey, we saw what happened last year when yields went up. Again, if you've got the federal government of the United States saying, and it's not here now, but if they say, you know what, rates are at 4.5 right now, you can get 4.5 on a 10-year Treasury, or you can own stocks that go up and down a lot. It's a pretty good alternative.
It is. I guess final wrap up. If you're the Biden administration, what's your takeaway? If you are Jerome Powell, what's your takeaway today?
If you're the Biden administration, you're probably going to strut because you say, hey, all you people predicting recession, it's not here. Okay?
Yep.
Is that the right approach? Not necessarily, because, again, the inflation shoe is yet to drop, and that might be the next one that comes in 5 or 6 months based on how hot things are looking now.
Could be.
If you are Jay Powell, you're biting your lip like, oh, no.
Yeah, this is a no report.
Like, this is an bleep moment for Jay Powell.
Yeah.
Like, that's what you're seeing here. And why don't we take a quick break, and when we come back...
Well, when we come back, we've got Omar Sharif coming.
Yes.
And he's going to talk to us all about that inflation report that we're going to get and yeah, exactly how Jerome Powell might be interpreting all this.
Yeah, so we'll talk to Omar right after this.
The latest news on inflation and how the markets are reacting every morning, right here on the Financial Exchange Radio Network.
The Secure Act was signed into law 3.5 years ago, but as of January 1st of this year, there's some important changes that may affect retirees and those who might be planning to retire. This is Mike Armstrong from the Armstrong Advisory Group, and our new guide called Understanding the Secure Act 2.0 was written to help address these changes so that you can make the best decision for your financial situation. As an example, the RMD age will now be 73 through year 2032, and then beginning in 2033, it'll be pushed to age 75. This could affect your tax bracket and the amount you might have to pay over your lifetime. Learn more about the Secure Act 2.0 by requesting this brand new guide today. You can call us at 800-393-4001. That number again is 800-393-4001, or you can request it by visiting our website, armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The United States Virgin Islands and Sports Illustrated Swimsuit have partnered for the second year in a row to give away a luxury trip for two to America's Caribbean paradise. The winner can choose either St. Croix, St. Thomas, or St. John. And the trip includes airfare from the continental U.S., 4 nights hotel accommodations, ground transportation, and a private photography session. The contest runs through February 13th, with the winner being announced on February 20th. Each island offers incredible experiences, from world-renowned scuba diving on St. Croix to the most pristine beaches in the Caribbean on St. Thomas to picturesque harbors and beautiful snorkeling on St. John. From the moment you arrive, you'll find yourself falling naturally in rhythm with the heartbeat of the islands because the weather is perfect all year round. There's no money to exchange and no passport required. Go to visitusvi.com for more information and to enter the contest. That's visitusvi.com.
This is Tucker Silva, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today, we're talking about the use of life estates in your primary residence. Todd, what are the pitfalls associated with creating a life estate when you transfer the remainder interest to your children?
So that's a great question because there are two ways to create them. One in which you indicated transferring the remainder interest to your children, and the other is transferring the remainder interest to the irrevocable trust that we talk about. When you give it to the children, you've done just that. You've made a completed gift to the child. You could have a gift tax consequence associated with it. You don't really control it anymore. You can't sell it without their permission. You could have adverse income tax consequences when you go to sell it, because after all, the kids don't live there, and they wouldn't get the capital gains tax exclusion associated with selling the property. Plus, you might not get the proceeds back, or at least not all of them, if you needed to buy another house. Folks, the better way to do this is to transfer the property to an irrevocable trust and reserve a life estate when you're going to do it. And there's not all the times that we think you should reserve a life estate. They should be done only sporadically. It's not the best way to go. But they do work, folks. They do work.
Learn how you can avoid probate, eliminate estate taxes, keep your money in your family, and protect your assets from the nursing home. Request this brand new guide from Cushing & Dolan, Calculating the Consequences of a Life Estate. You can call the phone number 866-848-5699, or you can simply request it from their website, legalexchangeshow.com. Once again, the guide's called Calculating the Consequences of a Life Estate, 866-848-5699, or you can request it at legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. Find daily interviews and full shows of the Financial Exchange on our YouTube page. Get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. And right now, you can take advantage of a great promotion if you travel to St. Croix. Book any hotel for a minimum of 5 nights and receive at least a 10% discount on your stay, as well as a $200 air credit per person, ages 16 and up. Use the code VIBE2023 when booking. Come to America's Caribbean Paradise. Go to visitusvi.com for full details and to book your trip. That's visitusvi.com.
As promised, we're now joined by Amir Sharif from Inflation Insights here to talk a little bit about, well, inflation. Amir, how are you doing today?
I'm doing great. How are you guys?
We're doing well. So we get a hot jobs report this morning. We had hot auto sales numbers for January, either yesterday or the day before, I can't remember. Hot ISM services coming out this morning, and all I can think of is, gee, does it seem like not just in the U.S., but overseas as well, all this demand may end up leading to a resurgence in inflation in the latter part of this year?
Yeah, I was saying to somebody this morning we should kind of maybe stop talking about a soft landing and start talking about a liftoff.
We might not land.
The numbers, the numbers are looking pretty good today. In terms of the resurgence of inflation, I've been of the sort of view that there's a decent chance we get a pickup in core inflation in the first quarter of this year. I feel like everyone's gotten pretty complacent because the last three reports were a bit more subdued.
Mm-hmm.
But typically in January, we tend to get a lot of new contracts coming in. And, if you just think back to even a couple of months ago, actually, honestly, even before today, the general view has been, look, there's a recession coming. It's coming in the next, 6 months probably. And so if you're a business trying to take price, this January setting a new contract is possibly the last chance you're going to have to take price, especially if the economy does end up in a recession. And so my feeling is, you could get some of these new contracts, which do feed into the CPI in January. We could get a bit of a pop over the next couple of months in core inflation. And I think that would be a surprise to a lot of folks who've sort of gotten used to the last 3 months of, slower inflation readings.
The one thing that I have always found with inflation is that it is something where it does take time for that to develop just because of how the methodology shows up in the CPI and other reports. So even if you start to see it building now, it might not actually show up for a quarter or two. Is that accurate at this point?
So I would say, yes, there are some lags in the CPI. The most obvious is in the way we measure housing. But in a lot of other areas of the CPI, it is basically happening, close to real time. So, for example, you mentioned auto sales earlier. Auto prices, and it doesn't matter if we're talking about used cars or new cars, that's based on actual transaction level data that happens every month. So all the sales that just happened in January for new cars, that pricing information is going to come into the next CPI that comes out on February 14th. So that's, pretty close to real-time information. It's really just housing, which is probably the biggest lag. And I would say, health insurance prices are also a big lag. So that is a pretty decent chunk of core inflation. You think about housing, that's 40%. That's going to lag by almost a year to what's happening in the rental market. But for a lot of other items, it is, I would say, very, very close to, sort of what you're seeing on the ground.
Omer, this is Mike. The last, 6 months of inflation reports have included a pretty significant drop in oil prices, gasoline prices, big ticket items that pretty much everybody pays for and everybody sees front and center. I'm guessing you, like I, have no idea where gas prices are going to go over the next 6 months. But if you strip that out, and again, I know you're alluding to core prices here, but do you have a sense for, hey, if we strip out gasoline alone and everything else, does what it's going to do, what are we looking at in terms of the next 6 months if we do, see flatlining oil prices or even see oil prices going back in the other direction? I mean, how much does that seep through to more than just gasoline prices, for example?
Yeah, so I guess I would say, first of all, I think everyone's seeing gas prices go back up. We had a nice run of prices declining, as you mentioned, the last 6 months. January looks like we're probably going to see gasoline up around, roughly 4%. February looks like it could be up another 1 or 2 percentage points. So it is going to add a bit to the headline inflation reading in the next, certainly in January report coming out in a couple of weeks, and then probably a bit in the February report as well. What I would say is in terms of it seeping through to other areas, I think the good news is that it's really not gasoline that's the bigger issue for the pass-through. It's more diesel. Diesel prices, obviously everything gets transported by truck. So diesel really matters quite a lot. And diesel prices right now, even though the numbers are still kind of high, we've seen some of these forward prices for diesel come down quite a lot the last several months. So I think that means diesel prices should come down pretty appreciably in the next 2-3 months. And I think that's going to, sort of put a lid on some of the pass-through to, say, for example, transporting food or transporting, furniture, things like that. That was a big part of the story last year. It seems like the next few months that'll be less of an issue.
Amir, when you look at how the how a resurgence in growth may impact the Fed and their actions, do you look at that and say, hey, they're probably going to, still pause in March and take that wait and see approach, or does this put another hike on the table potentially for that May meeting?
Yeah, so honestly, my takeaway after the last meeting was they're going to go in March, and they're likely to go again in May anyway. I mean, their forecast in December already said, look, we're going to get to just north of 5. Another 2 hikes would get you exactly to what they forecast in December. Mm-hmm. And I know you don't want to make too much of just sort of one day's report and one labor market report. But honestly, if you sit here, the market's already kind of after today priced out a lot of the cuts that it had in the back half of this year. So the market was looking for a couple of cuts coming, later this year. After this jobs number today, a lot of that has been kind of wiped out because of, essentially what you're implying, which is, hey, they might have to do a little bit more here. But my feeling after the meeting was their big concern is still inflation. They're not getting complacent, even if the market is. And if they need to do more, they're more than willing to go again after March and after May as well.
Very good. Amir, thank you so much for the time. We appreciate it, and have a fantastic weekend.
Same to you guys. Thank you.
That is Amir Sharif from Inflation Insights talking about, inflation.
I feel as though every single person that we have talked to recently about the economy, markets, Fed, which has been a lot of our talk, has kind of ended their conversation with, markets may be interpreting in one way, but I think the Fed is going to interpret this way, or we should interpret it that way. There seems to be a lot of concern about how markets are interpreting things right now.
Well, we're at that point where, again, everything is nicely in balance. If you look at just everything right now and say, hey, if the economy stayed like this forever, this would be great. It's true, okay? If you have inflation that's running 0.2% a month, and you're adding a ton of jobs, okay, that's exactly what you want.
Yeah.
Like, you're at this Goldilocks period. But there's, I forget who it is, I think it's Bob Elliott who coined a great term that's out there right now, which is transitory Goldilocks. We've had this idea that inflation was transitory, or there was this idea floating out there that it was. And people are looking at where things are right now, where, hey, Fed hikes have not really slowed the economy in any way. In fact, right now, again, for January at least, you're seeing an acceleration from what we saw in Q4. They have done enough where you are seeing inflation coming down, either because of what the Fed's done or just, hey, people and businesses adapt and costs get sorted out and this and that. So inflation's looking better. But does it stay there? And I think there are just an awful lot of people that are hanging their hat on, hey, this is good. This is where it should be. Like, we should appreciate this. And it's like, fine, you can appreciate it for what it is now, but just remember that markets and economies are always evolving. And that just because something looks one way today doesn't mean that's how it's going to look 6 to 9 months from now. And so I kind of use that idea of transitory Goldilocks to describe where we are right now, and that, yes, the economy in January, really freaking good. Does it stay that way? I'm not convinced. Let's take a quick break. When we come back, it's Wall Street Watch.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network. Life estates are not simple documents, and while they can be beneficial in some cases, you should be aware of the many pitfalls in using them. There's the potential for you to lose control of your estate, a higher risk of income tax consequences, and hidden gift issues that can arise as well. If you haven't done your planning yet, now's the time to learn about the effects that life estates can have when it comes to protecting your assets. Call Cushing & Dolan today at 866-848-5699 and request their new guide called Calculating the Consequences of Life Estates. Don't leave your assets to chance. Call 866-848-5699 and get your free guide today. Cushing & Dolan have been helping New England families for more than 30 years. Let them help you too. Call 866-848-5699 or request the guide online at LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The United States Virgin Islands and Sports Illustrated Swimsuit have partnered for the second year in a row to give away a luxury trip for two to America's Caribbean paradise. The winner can choose either St. Croix, St. Thomas, or St. John. And the trip includes airfare from the continental U.S., 4 nights hotel accommodations, ground transportation, and a private photography session. The contest runs through February 13th, with the winner being announced on February 20th. Each island offers incredible experiences, from world-renowned scuba diving on St. Croix to the most pristine beaches in the Caribbean on St. Thomas to picturesque harbors and beautiful snorkeling on St. John. From the moment you arrive, you'll find yourself falling naturally in rhythm with the heartbeat of the islands because the weather is perfect all year round. There's no money to exchange and no passport required. Go to visitusvi.com for more information and to enter the contest. That's visitusvi.com.
Veterans benefits just got a whole lot better. Whether you're about to leave the service or you've been out for decades, the PACT Act gives eligibility for VA benefits to thousands of veterans. The PACT Act is a new law that expands benefits for veterans exposed to burn pits, Agent Orange, and other toxic substances. To learn more, visit va.gov/PACT or call 1-800-MY-VA-411. If you or a loved one served this country, it's time to get the benefits you deserve.
Life estates are not simple documents and can carry risk, including the potential for you to lose control of your estate. If you haven't done your planning yet, call Cushing & Dolan at 866-848-5699 and get your free copy of their new guide called Calculating the Consequences of Life Estates. Call 866-848-5699 or request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a guide available this month titled Understanding the Secure Act 2.0. Mike, one of the provisions in here allows individuals to actually move money from a 529 plan that was supposed to be used for college into a Roth IRA for the beneficiary of the 529. How does it work?
Yeah, so this has been a common concern for parents out there is what if I over-contribute to a 529 plan, then I've got a bunch of money stuck in this account that I really can't touch until maybe I have grandchildren or some other scenario. And the Secure Act 2.0 attempts to solve some of that here. They've already changed it so you can use it for secondary education such as private high school and things like that. But this is a specific provision that allows you to move money from a 529 plan to the beneficiary in the form of a Roth IRA, so long as certain conditions are met. One, the account has to have been open for 15 years or longer. There's some limits to how much can be done in total over the lifetime, $35,000, and the traditional Roth IRA contribution limits do apply. So only one calendar year, $6,500. They must have earnings to be able to do so. But this is a significant change, and really, in my view at least, solves a lot of the problem and concern about overfunding a 529 plan.
Our guide this month is titled Understanding the Secure Act 2.0, and there are two ways that you can request it. The first is by calling 800-393-4001. The second way to request it is by going to ArmstrongAdvisory.com. That number again is 800-393-4001, or you can request it at ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Time for Wall Street Watch here on the Financial Exchange. And believe it or not, stocks are now in mixed territory as Wall Street reacts to the January jobs report that revealed 517,000 jobs were added last month, well above forecasts of 188,000, while the unemployment rate fell to 3.4%, which is its lowest rate in more than 53 years, mind you. At the moment, the Dow is now in positive territory, up by 13 points, still mostly flat. S&P 500 is off by 0.25% or 10 points, and the NASDAQ also off by 0.25% or 29 points. Russell 2000 also off by 0.25%, and this comes after stocks were in sell-off mode at the open in reaction to the jobs report, but they are erasing those losses, it seems. The 10-year Treasury yield is jumping 14 basis points, but now at 3.53%, and crude oil is jumping over 2.5% higher, now trading at $77.88 a barrel. Shares in Starbucks are down by 3% after the coffee giant posted earnings and revenue that missed forecasts for the fourth quarter. Earnings per share of 75 cents fell short of estimates of 77 cents, while its revenue came in at $8.71 billion, short of expectations of $8.78 billion. Starbucks attributed its miss to weakened international demand, especially in China. Meanwhile, Qualcomm reported fiscal first quarter revenue that also fell short of expectations and issued weak quarterly guidance. Revenue decreased 12% year over year in the quarter, while its net income slumped 34% to $2.24 billion. The chipmaker cited a challenging macroeconomic environment and higher channel inventory negatively impacting its results. That stock is up by 0.5%, however. And shares in Nordstrom are surging 22% following a report from the Wall Street Journal that activist investor Ryan Cohen is taking a sizable stake in the department store chain and intends to urge the company to make changes to its board. Cohen is previously known with his involvement with Chewy, GameStop, and Bed Bath & Beyond that have resulted in meme stock gains. And that's Wall Street Watch.
Let's talk a little bit about some of the tech earnings that we saw yesterday, because it was just boom, boom, boom. 3 in a span of about 15 minutes. I was getting CNBC notifications popping up on my phone like confetti after the Super Bowl.
Pretty busy.
So, should we go in order of how they reported?
I was thinking that.
Okay.
So it was Amazon.
Chronological?
It was Amazon, Google, then Apple.
Got it.
Yeah.
So let's swing things around a little bit. Let's see here. Amazon. So they reported first, and big things that we saw. They came in with earnings at 3 cents a share compared to expectations of 18 cents a share. Revenue did beat $149 billion versus $145 billion expected.
Yep.
But Amazon Web Services was a couple percent slower than expected. Ad revenue was a couple percent better than expected. So the stock at one point was down as much as 7% after hours. Today it's down about 5% in actual trading. And I think the big thing is they also guided towards a lower range of sales for Q1 than Wall Street was expecting.
Yeah. Sales at the company's online store segment, which is, Amazon.com, among some other minor stuff. Those fell by 2%. As you pointed to, Chuck, AWS sales growth slowed to 20%. I think the only thing you can look at as genuinely positive news is they seem to be taking ad revenue from Facebook and Google.
Yeah, and even there, you wonder, how long that growth can continue.
Probably not forever.
Yeah. So, again, I think the big thing is this has been a company where the growth engine for profits and really overall has been Amazon Web Services, and that is growing just at 20% for this quarter, down from 27.5% for the third quarter. So there's a slowing growth story there with AWS, and that is something that does matter in terms of, hey, how much are you willing to pay for this stock?
They closed the year with 1.54 million full and part-time employees. That's 4% fewer than they had 12 months ago.
So many employees, though.
It is a lot, especially considering at 2019, I think there were maybe 600,000 to 700,000.
However much they're paying the head of HR, they're not paying them enough.
Likely not.
I mean,
the head of HR is just a robot, just so we're all on the same page about Amazon here.
Imagine the stress, because obviously like that.
I don't mean like they are robotic as a personality like Mark Zuckerberg. I mean that when they are making job offers to people to go work at Amazon, it's just enter your social security number, here's a job.
Yeah, it's just kind of wild thinking about how to manage an HR department that must be that big, because they had times where didn't they go through a period where they were hiring 10,000 people a day? Didn't they hire like 150,000 in one quarter back in 2020 or something like that?
Yeah, I think so.
So that was like 15,000 people a day.
Yeah.
I mean,
pretty incredible.
I just don't understand how you can actually. I mean, again, you just have to have a ton of. Your HR department must be 10,000 people on its own, if not more.
Yeah. Again, A job interview with Amazon is not like anyone that you've ever gone through.
No, but you got to manage all the benefits, and then I'm sure there are employee complaints and this and that. So it's, there's all that you got to manage. And that's one job in the world that I can honestly say, I don't think you could pay me enough money to handle that stress. It's up there in terms of worst jobs you can have, in my opinion. Head of HR for Amazon?
Yeah, don't get me wrong. It would be quite rough. Let's move on.
Okay, let's talk a little bit about Google, or Alphabet, as they are officially called. They reported, again, advertising revenue that declined here. So maybe, again, as you noted,
for the first time since the beginning of the pandemic.
Yeah, as you noted, maybe that's Amazon stealing some, or maybe it's more what Snap has been seeing with trouble, delivering ads. $59 billion in ad revenue, so still lots of billions, but that is down 3.6% year over year from the same period in 2021. And not only the first time since the pandemic that they saw a year over year decline in ad revenue, it's only the second time since Google went public in 2004 that they've had a year over year decline in ad revenue.
Yeah. That in and of itself is talking to you about the maturity of Google and where they grow from here. One area that they clearly seem threatened on, did you see how much they talked about AI?
I did, and what I worry about with all of the chatter about AI right now, specifically ChatGPT, which Microsoft has poured a bunch of money into.
Which I want to get into at some point, but they just announced a whole bunch of integrations with Microsoft Teams and ChatGPT or OpenAI.
So I've spent, I don't know, maybe 20 hours or so playing around with ChatGPT. And it's impressive technology, don't get me wrong, but not only does it sometimes give you wrong answers, occasionally it just makes crap up, which is really interesting, actually.
And they actually say that.
They
disclose it to everybody, like, hey, sometimes this just makes stuff up.
Here's how it happens in the cases that I've seen. So let's say that you're asking for a cite on a paper. You say, hey, show me a paper that, write 4 paragraphs about economics and cite what you think is the most influential economics paper of the last 40 years.
Yep.
And it'll give you a paper that doesn't exist with a real author in a year that is not when the fake paper was actually published. And what people have kind of deduced is, hey, because it's trying to find middle ground, basically. The way its neural engine works is it says, okay, I want to look for, things that connect the most times to any particular topic. And so it pulls economic buzzword 1 from here, economic buzzword 2 from here, and then sticks a year from like the middle of the range that you give it and says, okay, and this is, someone who's noted as an influential author, so they wrote this paper even though they didn't. And that's how it makes something up that doesn't exist. It obviously doesn't know this because if it had real intelligence, it would not lie to you like that.
It would go back and check.
It would fact check itself, which it doesn't do. So, it still is something that needs adult supervision, AI. And the other thing that I've seen is that it's really, really expensive to actually generate those results. So
all probably true. And I have no idea where it goes, but as a general just measuring tape here, they grew to 100 million active users faster than TikTok and Instagram.
Yes, and here's the problem with that. They're not monetizing it right now.
Nope.
And it's really expensive to run.
Yep.
Which means that for the near future, it's a huge, huge drag.
Oh, yeah. They'll lose a ton of money for a while.
Okay.
But you just grew 100 million active users faster than 2 of the most popular social media platforms in history.
And here is the really interesting part about this, though, if you're looking at, kind of the upside in comparison. Facebook, or Meta, spent $10 billion last year building a metaverse that no one wanted, right? And, hey, the metaverse is going to be we're all going to hang out in the metaverse with no legs, and this is going to be great, and blah, blah, blah. Like, they spent all that money. And what'd they get to, like 500,000 users or something like that?
No, that was their goal. They missed that goal by a lot.
And they marketed it. I mean, they had celebrities doing metaverse appearances and stuff. They had ads showing up all over Twitter and everywhere. They were putting a lot of money into this, and they couldn't get 1 million people into it consistently. Did anyone actually do any marketing for ChatGPT?
Have you seen a single commercial for it?
So this is what I'm saying. When you talk about, the growth and what really comes next, it's not usually the thing that you have to spend $10 billion building and then a lot more money marketing and, oh, gee, now we finally got, 1 million people to view it. ChatGPT did it organically, just like Facebook did originally.
Yeah.
Now, do those users hold once they find out, gee, there are some problems with it? Don't know, but I will tell you, I have a buddy of mine who knows a couple professors. They are actually requiring, as part of their courses, students to use ChatGPT. They're not fighting it and saying, don't use this better hammer that we built. Instead, they're saying, how can we incorporate this into our courses so that you can figure out how to use the technology when it helps you, but also figuring out when it's hurting you.
Yep.
So the fact that even professors are, picking up on this stuff now, I find interesting. We'll take a quick break here, and when we come back, I want to talk about Apple's earnings after this.
Business and financial news affecting the markets and your wallet. We've got it all, straight from Wall Street, right here on the Financial Exchange Radio Network. The United States Virgin Islands and Sports Illustrated Swimsuit have partnered for the second year in a row to give away a luxury trip for two to America's Caribbean paradise. The winner can choose either St. Croix, St. Thomas, or St. John. And the trip includes airfare from the continental U.S., 4 nights hotel accommodations, ground transportation, and a private photography session. The contest runs through February 13th, with the winner being announced on February 20th. Each island offers incredible experiences, from world-renowned scuba diving on St. Croix to the most pristine beaches in the Caribbean on St. Thomas to picturesque harbors and beautiful snorkeling on St. John. From the moment you arrive, you'll find yourself falling naturally in rhythm with the heartbeat of the islands because the weather is perfect all year round. There's no money to exchange and no passport required. Go to visitusvi.com for more information and to enter the contest. That's visitusvi.com. Life estates are not simple documents, and while they can be beneficial in some cases, you should be aware of the many pitfalls in using them. There's the potential for you to lose control of your estate, a higher risk of income tax consequences, and hidden gift issues that can arise as well. If you haven't done your planning yet, now's the time to learn about the effects that life estates can have when it comes to protecting your assets. Call Cushing & Dolan today at 866-848-5699 and request their new guide called Calculating the Consequences of Life Estates. Don't leave your assets to chance. Call 866-848-5699 and get your free guide today. Cushing & Dolan have been helping New England families for more than 30 years. Let them help you too. Call 866-848-5699 or request the guide online at legalexchangeshow.com. That's legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
The Secure Act became law in 2019, but a new bill has updated some key areas. As of January 1st of this year, it's time to take another look at how these changes may affect your financial situation. Hi, this is Chuck Zodda from the Armstrong Advisory Group. And whether it's the new age for required minimum distributions, how RMDs are affected if you have a Roth 401k account, or changes to catch-up contributions to any employer-sponsored retirement plan, we have a brand new guide called Understanding the Secure Act 2.0. This guide provides important information as to how any or all of these issues may affect your personal financial strategy. Call us right now at 800-393-4001 and request your free guide today, or you can request it at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Veterans benefits just got a whole lot better. Whether you're about to leave the service or you've been out for decades, the PACT Act gives eligibility for VA benefits to thousands of veterans. The PACT Act is a new law that expands benefits for veterans exposed to burn pits, Agent Orange, and other toxic substances. To learn more, visit va.gov/PACT or call 1-800-MY-VA-411. If you or a loved one serve this country, it's time to get the benefits you deserve.
Life estates are not simple documents and can carry risk, including the potential for you to lose control of your estate. If you haven't done your planning yet, call Cushing & Dolan at 866-848-5699 and get your free copy of their new guide called Calculating the Consequences of Life Estates. Call 866-848-5699 or request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Watch the show every day on Twitch TV, Facebook, and our website, FinancialExchangeShow.com. We're breaking down the biggest business stories of the day only on the Financial Exchange Radio Network.
To complete the tech trifecta, Apple reported earnings after the bell as well. They fell about 6% initially, but as we look at Apple stock today, it's up 3%. Why the 8% reversal, Mike?
Well, the market's done the same thing, so I think it's just following suit. But my main takeaway was worse than expected, but not that bad. And in this market, that's good enough. And now I'm looking at, up 3.4%. But what they pointed to was that they had a pretty bad number compared to expectations for their iPhone sales. They pointed it mainly towards manufacturing disruptions in China, as well as currency fluctuations. Not much of an admission on the part of Tim Cook that there is a demand problem, really focusing on supply chain disruptions from manufacturing in China. Okay, I'll buy it.
Yep.
Currency fluctuations, also, distinctly possible for the most recent quarter. Everyone else, all the analysts are stepping back and saying, okay, you've got a demand problem. You take a look at analyst commentary saying, well, I think that they might actually have a piece where people are pulling back and not spending quite as much. I think that could be the case. But honestly, the data over the last couple of weeks could point towards another pretty solid year for Apple if people aren't in fact pulling back in the way that we all thought they were.
Yeah, and look, I think here's where things get tough to reconcile. I've been saying for a while that my big concern for 2023 is, hey, what if earnings are overpriced? Okay, and in light of the data that we've gotten for the last month, I think you have to look at it now and again, you have an opinion, but you adjust it as you get new data that comes in. Hey, what if earnings this year come in fine, but what if inflation rears its head again and the earnings hit shows up a year later because the Fed's got to hike again, pretty aggressively? So I have moved into the camp now where I think the biggest risk to this economy overall is overheating again and running into more inflation coming back. So Apple, yeah, they're kind of, they might be showing us that path where, yeah, we had a bad Q4, but maybe we start to see some recovery then, and earnings this year turn out to be decent, but maybe the multiples have to come down just because there are better risk-free alternatives that are out there.
Could be. Apple, I will say, is one of the few tech companies out there that hasn't fallen into the trap of dramatically expanding its workforce over the last few years. It's still expanded, but I think it was by maybe 20% as opposed to, most others dramatically increasing.
Building the proper estate plan not only protects your assets from the nursing home, but also helps you avoid probate and potentially eliminate estate taxes. However, if you choose to use a life estate, you need to be aware of the many problems it can cause. Life estates are complicated. They could create significant issues such as losing control of your estate. So call Cushing & Dolan today at 866-848-5699 and get their new guide called Calculating the Consequences of Life Estates. In it, you'll learn about strategies you can use to make sure that you create the right document for your estate plan. Call right now, 866-848-5699, and request your free guide called Calculating the Consequences of Life Estates. That's 866-848-5699. Or you can request the guide online from their website, LegalExchangeShow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated.
According to Vanguard, 90% of investors in 401k-style retirement plans either maintained or increased their savings rate in 2022. So a good sign on the retirement savings side of things there, but also somewhat at odds with, we talked with, who was it earlier this week that we talked with? Was it Ted Rossman from Bankrate about credit card usage?
Yeah, Monday.
We talked with Ted on Monday about how Americans were racking up higher credit card balances. And so these two things, again, maybe not the same groups that are participating there, but we're getting differing messages in that, hey, credit card debt is worsening, but Americans are also saving more into retirement plans.
Well, I'll give you one that is not different data sets. Vanguard themselves yesterday came out
the hardship
and said
withdrawals.
that the hardship withdrawals were up from 2% average to 2.8% last year.
Yeah.
So there's some contradictory information going on here. And yeah, in spite of that, that number that 90% maintained or increased, it's fair to point out that last year 9% of workers with 401k accounts scaled back their savings rate from 2021. That was only at 7% the year before. So yes, most of them maintained or increased, but a larger percentage scaled back compared to the previous year. So I think you can interpret that data differently depending on how you want to read it. There's a bunch of other interesting information in here. Only 6% of participants who managed their own 401k investments transferred money from one fund to another last year. And while we think of the last few years being these really heavy trading years, that number was only 8% of participants in 2021 and 10% in 2020. So not that that's hugely surprising. There are limited options in a 401k, but a very small portion of people actually touching those things.
So let's take a quick break here. When we come back, hour 2 of the Financial Exchange is coming up, and Paul LaMonica will be joining us during that hour.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
This is Tucker Silva with the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your quick tip of the day. And today we're talking about the use of life estates in your primary residence. Todd, who should consider reserving a life estate for their primary residence?
So because of the one problem associated with life estates, and that is that when you sell it, you get a portion of the assets back, which could make it at risk for the nursing home again if you do sell it during your life. Because of that, I think the only time you should use this is, one, if you are in a two-family home and you're renting it. That way the rent comes directly to you because as a life tenant, you're entitled to the income from the property. Two, you might be getting one of those VA benefits, or in your particular town, you might get a real estate tax abatement. If you get the real estate tax abatement, you need to reserve the life estate in order to preserve that real estate tax abatement. And the third reason you would reserve a life estate is when you have a mortgage, right? A lot of people don't think they can do irrevocable trusts if they have a mortgage on their property. Well, you can, but when you transfer the property to the irrevocable trust, you need to reserve the life estate so as not to trigger the due on sale clause on your mortgage. This way you can keep your mortgage and still do your Medicaid estate planning.
Learn how you can avoid probate, eliminate estate taxes, keep your money in your family, and of course protect your assets from the nursing home. Request this brand new guide from Cushing & Dolan. It's called Calculating the Consequences of a Life Estate. You can call 866-848-5699, or you can request it from LegalExchangeShow.com. Once again, 866-848-5699, or request the guide online at their website, LegalExchangeShow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. The United States Virgin Islands and Sports Illustrated Swimsuit have partnered for the second year in a row to give away a luxury trip for two to America's Caribbean paradise. The winner can choose either St. Croix, St. Thomas, or St. John. And the trip includes airfare from the continental U.S., 4 nights hotel accommodations, ground transportation, and a private photography session. The contest runs through February 13th, with the winner being announced on February 20th. Each island offers incredible experiences, from world-renowned scuba diving on St. Croix to the most pristine beaches in the Caribbean on St. Thomas to picturesque harbors and beautiful snorkeling on St. John. From the moment you arrive, you'll find yourself falling naturally in rhythm with the heartbeat of the islands because the weather is perfect all year round. There's no money to exchange and no passport required. Go to visitusvi.com for more information and to enter the contest. That's visitusvi.com.
Veterans benefits just got a whole lot better. Whether you're about to leave the service or you've been out for decades, the PACT Act gives eligibility for VA benefits to thousands of veterans. The PACT Act is a new law that expands benefits for veterans exposed to burn pits, Agent Orange, and other toxic substances. To learn more, visit va.gov/PACT or call 1-800-MY-VA-411. If you or a loved one served this country, it's time to get the benefits you deserve.
Life estates are not simple documents and can carry risk, including the potential for you to lose control of your estate. If you haven't done your planning yet, call Cushing & Dolan at 866-848-5699 and get your free copy of their new guide called Calculating the Consequences of Life Estates. Call 866-848-5699 or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is the Money Matters Radio Network. WBNW 1120 AM and W275 CM FM. Concord, Boston. The Money Matters Radio Network.
Life estates are not simple documents, and while they can be beneficial in some cases, you should be aware of the many pitfalls in using them. There's the potential for you to lose control of your estate, a higher risk of income tax consequences, and hidden gift issues that can arise as well. If you haven't done your planning yet, now's the time to learn about the effects that life estates can have when it comes to protecting your assets. Call Cushing & Dolan today at 866-848-5699 and request their new guide called Calculating the Consequences of Life Estates. Don't leave your assets to chance. Call 866-848-5699 and get your free guide today. Cushing & Dolan have been helping New England families for more than 30 years. Let them help you too. Call 866-848-5699 or request the guide online at legalexchangeshow.com. That's legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a guide out this month titled Understanding the Secure Act 2.0. Mike, one of the big changes in the Secure Act 2.0 is that RMD ages are on the move again. What's happening with them?
They are. So this kind of slipped under the radar last second at the end of last year, so it hasn't got as much attention outside of certain circles. But previously, RMD age was 70 and a half. It got moved back a few years ago to 72. Now they're moving it again. So for those born between 1951 and 1959, your new required minimum distribution age is 73. If you were born 1960 or later, you're now moving to an age 75 for required minimum distribution, which creates a whole bunch of new opportunities that weren't previously available.
Yeah, and certainly when you look at this, it gives you the ability to adjust and manage your tax burden longer into your retirement, potentially employing things like Roth IRA conversions for additional years than previously was allowed.
It does, yeah. So Roth IRA conversions have been a big topic in financial planning for the last few years, and effectively this just gives you more flexibility when it comes to those. Other changes regarding RMDs, you used to need to take one on a Roth 401k account. They did away with that entirely. So a lot of changes in this new bill, and we cover all of them in our new guide on Secure Act 2.0.
The guide is titled Understanding the Secure Act 2.0, and there are two ways to request it. First, you can call 800-393-4001, or you can request it online at armstrongadvisory.com. That number again is 800-393-4001, or request it at armstrongadvisory.com. TheMoneyMatters.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated.
This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends. Plus, get breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. You too can support our great American heroes by visiting financialexchangeshow.com/DAV. And now, it's time for the Financial Exchange with Chuck Zodda and Mike Armstrong.
As we kick off the 11 o'clock hour, we've got markets now mixed after a harshly negative open this morning. The Dow is now up 33 points. The S&P is down just 7, and the NASDAQ down just 15. So even after a hot jobs report that we saw today, it's, again, just a case where... Thank you, Michael. It's a case where, at least at this point, markets are saying, hey, we've got growth and growth going up, inflation's coming down. Isn't this lovely? Which the answer is yes, it is.
Yeah, for now.
If you look at what we have seen so far, the answer is yes. For the last 3 months that we have, I know we don't have much January data yet aside from a couple data points. Like we don't have any inflation data for January yet. But the last 3 months of data overall on the growth and inflation side have been really encouraging. The piece that I am not buying, okay, is I think there is another shoe to drop, and the more likely one, in my opinion, is that this growth rebound is real, not just in the U.S., but overseas as well, and that it will bring with it additional inflation.
Yeah, I mean, if you take a look at the last 3 months, why this seems to be such a reversal in January, to me at least, is that the last 3 months were defined by that lower inflation, but you had these layoffs being announced. I think people were genuinely concerned about about recession going into the end of the year. And today's data plus a few other data points from January seem to have reversed the recession concern, and we have yet to receive any new data on bad inflation. And so in the absence of that new data, it's been all good. It has been all good news to this point. But once again, I mean, look, you can make excuses for it. You can say you don't trust the data. You can say that it's January data and it'll get revised. But in any way you look at it, the numbers in this jobs report nearly tripled expectations.
Yeah, and again, let's say that you don't believe the U.S. government data. I do, okay? Sure. Because, again, if you've ever met economists, they don't have time. They don't have the energy to make jokes. Okay? It's just not what they do.
Well, beyond that, there are so many people involved in gathering the data around the Bureau of Labor Statistics jobs report that bribing all of them to do your bidding would be rather difficult.
Yes, and again, it's not like when one administration comes in, they clear those people out and put their own.
No.
The rank and file, they are career civil servants. They've been there like 30 years through 8 different presidents. Yeah. In any case, even if you don't believe, the government data that is coming out, which, again, I think you should believe it because, again, these people don't turn over that way. If you look at the private data that is being released, ISM Services, which the Institute of Supply Management is not a government organization. It's a bunch of people who decided, hey, we're going to go and, be the, trade group for different, manufacturers and service groups, and we're going to survey them as a result. Mm-hmm. They do a survey of private businesses. The ISM Services this morning printed 55.2. Any number above 50 is growth. The prior one was 49.2. The forecast for this one was 50.6.
Yeah. Blew it out of the water.
Hot. Yeah. Hot. Okay. Baker. Yes, thank you very much. Baker Hughes this afternoon is going to talk about their rig count that they have in the continental U.S. That is a private company that's reporting data. So the private data is matching what we are hearing on the government data side of things.
Yep.
Okay. That is the big takeaway that I have on this.
Let me ask you this. Does this jobs report that we received this morning increase or decrease your likelihood of, or keep it the same, the likelihood of the soft landing? So I think you had previously put that personally at 1/5 probability. Does this reverse that a little bit and say, no, it's tough to do a soft landing when you've got prints like this on labor market? Or where do we go with that? I think recession certainly gets lower in my mind.
Not just prints like this on labor market, but you've got, auto sales spiking back up after being, very quiet in December. You've got a housing market that is showing signs of bottoming, again, according to private data, not, government data. It's something where, in my mind, the data is now getting warm enough that, yes, that soft landing probability might be down to 15% in my book. If before this week, okay, if you had to poll me on, what we were seeing, I would have said, and I think I did say, 45% hard go around, meaning we don't, bottom and, inflation takes off
comes
again.
Back up. Yep.
I think I had 30% soft landing, or 30% hard landing, 20% soft landing, and 5% stagflationary abyss. If you're polling me today, probably up to around 60% hard go around. I am at still 25% hard landing. I think, because again,
Sure.
labor data can be really lagged, so you still could get one this year. I'm at about 15% soft landing and 0% stagflationary abyss.
Yeah, that one doesn't.
You don't get data like we've gotten from January, and then by the end of the year, you've got negative growth and inflation's back up to 8%. That's
right.
I can't see that happening at this point this year. So that's where I land today. Is I'm increasingly convinced the bigger risk to the U.S. economy is a second bout of inflation that requires higher rates that then may end up leading to a recession in subsequent years as a result. Having said all that, look, you still have the 10-year, 2-year treasuries, that's still inverted on the yield curve, so you still got, some potential signals out there that usually hit, 12 to 18 months from now about a recession. So anything's possible. I mean, there are still a wide range of outcomes, but the rebound in inflation is more likely after the data we've gotten, in my opinion, now.
In any case, markets are excited.
Yeah, markets are looking at this and saying, okay, we freaked out for 5 minutes and now we're fine.
Yep.
Now they might come in on Monday and say, okay, now we're freaked out again, but
Yep.
Who knows?
Wait till you get the first few inflation reports. I think that's the real tell.
Yeah, I would agree. The United States has been overflown by a Chinese spy balloon in the last day or two.
I don't mean to laugh at this. This is a serious story.
It is. I mean, look, for better or for worse, it's a significant invasion of U.S. sovereign airspace in a way that appears to be not provocative just because it's a balloon and you're like, okay, at first glance you're like it's a balloon, but it was seen hovering around what are believed to be U.S. nuclear launch sites and things like
Montana.
that.
Yep.
China has said, no, this is a private enterprise. They came out this morning and said this was something that was trying to do meteorological surveys and this and that, which you don't need a weather balloon to do meteorological surveys over the United States. You could call us up and ask what the weather is.
Yep, got the National Weather
That'd be fine.
Service. We're the National Weather Service. We're pretty open about that stuff.
Or you could
Published
maybe,
everywhere.
coordinate with the U.S. to say, hey, we want to launch a weather balloon into your airspace, but that was not done. So,
So neither of us are defense experts, but if you points here. This is days before Secretary of State Anthony Blinken is supposed to make a trip to Beijing.
He's not going anymore.
Did they announce it?
They announced
they
it.
postponed it.
He's not going, which is the right move.
Yeah. So who knows, right? Was this something gone wrong that they
Michael,
did
it's not
unintentionally?
something gone wrong.
It was not probably floating.
You don't lose a
over
weather
Montana.
balloon by 8,000 miles.
Right. Yeah. And it doesn't just happen to be flying over places that are pretty important to national defense in the U.S.
Yeah. So where this goes, in my opinion, it's going to be further tensions that build between the U.S. and China. I think that a perfect response, and again, you're going to have to coordinate with U.S. allies in the region it would be on the western side of China in order to do this. India, Pakistan, whoever you want to get involved in this. They sent one spy balloon over the United States. We're going to send 1 billion real balloons over China. And inside each real balloon is going to be Winnie the Pooh confetti. Because the image of Winnie the Pooh is banned in China.
It is, yes.
Because anti-Xi groups use the image of Winnie the Pooh to say, hey, Xi looks just like Winnie the Pooh, and we don't like him. So China, back in, I think, 2018, banned images of Winnie the Pooh. So I want to launch 1 billion real, just normal balloons.
It's like up.
How long have you been
filled
waiting
with Winnie
on
the
this
Pooh
up
confetti.
music, Tucker?
I want to fill them with Winnie the Pooh confetti and send them into China.
I feel like this is a song that Tucker has been waiting for weeks for the right story for, and this one just fell in his lap. Just floated right into his lap.
That's how my brain operates.
But look, this is a significant move. I know that it might not seem like it at first blush because it's a balloon.
And by the way, the Chinese military has a track record of these going over Taiwan and other countries in the surrounding area, so it is pretty clear what's going on.
This isn't a guy in a basket.
Yeah.
At 800 feet. This is high up in the atmosphere. Ability, can be steered and things like that.
Sure.
It's closer to a blimp than a balloon.
Yeah. Well above like flying space for commercial airlines, for example.
So I will be interested to see what the U.S.'s response is beyond simply canceling Secretary Blinken's trip here. This is, again, a meaningful provocation, not certainly military in terms of not causing any damage, but hey, guys, what are you doing?
Yeah.
We're not going to do this, okay? Let's take a quick break, and when we come back, we've got trivia.
The Financial Exchange has a brand new text code. Text us at 617-362-1385 and keep on top of breaking business news all day long. This is the Financial Exchange Radio Network.
The Secure Act became law in 2019, but a new bill has updated some key areas. As of January 1st of this year, it's time to take another look at how these changes may affect your financial situation. Hi, this is Chuck Zodda from the Armstrong Advisory Group. And whether it's the new age for required minimum distributions, how RMDs are affected if you have a Roth 401k account, or changes to catch-up contributions to any employer-sponsored retirement plan, we have a brand new guide called Understanding the Secure Act 2.0. This guide provides important information as to how any or all of these issues may affect your personal financial strategy. Call us right now at 800-393-4001 and request your free guide today. Or you can request it at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The United States Virgin Islands and Sports Illustrated Swimsuit have partnered for the second year in a row to give away a luxury trip for two to America's Caribbean paradise. The winner can choose either St. Croix, St. Thomas, or St. John. And the trip includes airfare from the continental U.S., 4 nights hotel accommodations, ground transportation, and a private photography session. The contest runs through February 13th, with the winner being announced on February 20th. Each island offers incredible experiences, from world-renowned scuba diving on St. Croix to the most pristine beaches in the Caribbean on St. Thomas to picturesque harbors and beautiful snorkeling on St. John. From the moment you arrive, you'll find yourself falling naturally in rhythm with the heartbeat of the islands because the weather is perfect all year round. There's no money to exchange and no passport required. Go to visitusvi.com for more information and to enter the contest. That's visitusvi.com. Life estates are not simple documents, and while they can be beneficial in some cases, you should be aware of the many pitfalls in using them. There's the potential for you to lose control of your estate, a higher risk of income tax consequences, and hidden gift issues that can arise as well. If you haven't done your planning yet, now's the time to learn about the effects that life estates can have when it comes to protecting your assets. Call Cushing & Dolan today at 866-848-5699 and request their new guide called Calculating the Consequences of Life Estates. Don't leave your assets to chance. Call 866-848-5699 and get your free guide today. Cushing & Dolan have been helping New England families for more than 30 years. Let them help you too. Call 866-848-5699 or request the guide online at legalexchangeshow.com. That's legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Veterans benefits just got a whole lot better. Whether you're about to leave the service or you've been out for decades, the PACT Act gives eligibility for VA benefits to thousands of veterans. The PACT Act is a new law that expands benefits for veterans exposed to burn pits, Agent Orange, and other toxic substances. To learn more, visit va.gov/PACT or call 1-800-MY-VA-411. If you or a loved one served this country, it's time to get the benefits you deserve.
Life estates are not simple documents and can carry risk, including the potential for you to lose control of your estate. If you haven't done your planning yet, call Cushing & Dolan at 866-848-5699 and get your free copy of their new guide called Calculating the Consequences of Life Estates. Call 866-848-5699 or request it online at legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
If you missed any of today's show, catch up whenever you want on our YouTube page. Find daily show segments and full shows. Just go to youtube.com and search for The Financial Exchange. This is your home for breaking business and financial news. This is the Financial Exchange Radio Network.
Time for trivia here on the Financial Exchange, and trivia is, of course, brought to you by Encore Boston Harbor. Visit EncoreBostonHarbor.com and see for yourself why Encore is a Forbes 5-star award winner for both hotel and spa. On July 3rd, 1985, the greatest time travel movie ever made was released, Back to the Future. The movie grossed nearly $400 million worldwide, spanned 2 sequels, and immortalized Michael J. Fox. So our trivia question today is, Michael J. Fox was not the original actor in the role of Marty McFly, which is news to me today, by the way. Which actor was originally cast as Marty McFly and actually filmed a third of the movie before being fired? Once again, which actor was originally cast as Marty McFly and actually filmed a third of the movie before being fired? Be the fourth person today to text us at 617-362-1385 with the correct answer, and you'll win a Financial Exchange Show t-shirt and be registered to win a $100 gift card to Encore Boston Harbor. Be sure to include the keyword Encore in your text, and we'll give that gift card away in the next segment. Once again, 617-362-1385, and the fourth correct response will be our winner. See the complete contest rules at financialexchangeshow.com.
There's a headline in Bloomberg. When markets are this hot, should you jump in?
It's an eye catcher.
It is, and it's 3 pages of not answering the question.
Thank you, Mohammed El-Arian. It is an opinion piece by Mohammed El-Arian.
So, look, here's the thing. If you were asking this question in October of 2020 with hindsight, you'd say yes.
Yep.
Because markets were really hot, and they just got hotter for the next 15 months. If you were asking it in December 2022, the answer would be, well, no, like things went poorly from there. So it's the run-up in stocks doesn't inherently make it a good or bad time to invest.
Sure makes it tempting, though.
Okay, I can't tell you how many people, and I've seen this on both sides, where, okay, stocks have run for the last, 5 years. Well, I don't want to buy now. It's things have gone up too much. I'll wait for the pullback. Okay, that was in 2015. The pullback didn't come for, the next 5 years until you got to the pandemic.
2020. Yep.
Okay. So sometimes waiting is the wrong thing to do. There's other times where, yeah, in January of 2022, gee, things have gotten a little too hot. Maybe I'll wait for the pullback. Okay, like that worked for you. But just because stocks have either run or because they've fallen
does not make them inherently cheap or expensive or any indication of where they will go next.
No. So you can't answer this question in a Bloomberg piece because it doesn't get at any of the answers along the lines of, okay, well, are you just buying into the whole market or are you buying parts of it? Are you buying individual names? What's your time horizon? Do you want to be trading, on a daily basis? Do you want to be trading monthly? Do you just want to be a buy and hold investor? None of these things
I don't
get
blame
asked in here.
Mohammed El-Arian for not answering the question.
If
he wrote the headline, I blame him. But, yeah, you can't answer a question of should you specifically jump into a market at any given point in time if you want to be, at least regarded as a responsible market and economy expert. A few things that he points out that, again, are interesting conclusions that I share some of these. Quote, I suspect that the downward path of inflation will hit a sticky patch at around 4% later this year. Notwithstanding job vacancies outpacing the unemployed by 1.9 times, the labor market risks will come under some pressure from widespread layoffs. So he is laying the ground, he is laying a little bit of groundwork and, putting a line in the sand on some of these items, saying, hey, inflation he expects to get down to 4% and then not really do much beyond that. He is expecting more unemployment in 2023. So at least you're giving something to judge on, but no real conclusion here from Bloomberg or El-Arian on what to do in this type of market.
As there should not be in a three-page article.
Not expecting anyone to do so.
This is something that you need to spend some serious time thinking about and not just, oh, I read, that so-and-so said that this was a good time to invest, so I'm going to invest. Like, if all it takes is reading one article to change your mind.
Call him.
What?
Call him.
Gollum?
Call him.
Call who?
Opinionated column. That's what this is.
Yeah. Okay.
What did I?
It's fine. Just keep going. You said article.
Article instead of column.
Oh, okay.
I thought you said to be calm. Yeah, at first.
I did too.
And then you said it again.
Calm.
I thought you were making a Lord of the Rings joke here or something.
Calm. You thought I said calm.
I thought you said calm too.
You thought I said Gollum.
I was making a joke.
So apparently I suck at enunciating. So. All right.
Well, calm, Gollum, and column sound awfully alike.
Calm.
So you're saying frog protection? Yeah, frog protection.
Sorry to cut you off.
Great. Yeah, don't make large investment decisions based on reading one piece in a major publication
or columns.
What? That's why I said piece, not article. I didn't want to get into it
Don't
again.
get in that trap again.
Let's take a little break. When we come back, we've got the trivia answer, and then we're talking about why the bosses are back in charge.
The Financial Exchange is live on Facebook, so make sure to like our page and watch the guys break down the latest on the markets every day beginning at 10 on the Financial Exchange Radio Network. Building the proper estate plan not only protects your assets from the nursing home, but also helps you avoid probate and potentially eliminates estate taxes. However, if you choose to use a life estate, you need to be aware of the many problems it can cause. Life estates are complicated. They could create significant issues, such as losing control of your estate. Call Cushing & Dolan today at 866-848-5699 and get their new guide called Calculating the Consequences of Life Estates. In it, you'll learn about strategies you can use to make sure that you create the right document for your estate plan. Call right now, 866-848-5699, and request your free guide called Calculating the Consequences of Life Estates. That's 866-848-5699. Or you can request the guide online from their website, LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The United States Virgin Islands and Sports Illustrated Swimsuit have partnered for the second year in a row to give away a luxury trip for two to America's Caribbean paradise. The winner can choose either St. Croix, St. Thomas, or St. John. And the trip includes airfare from the continental U.S., 4 nights hotel accommodations, ground transportation, and a private photography session. The contest runs through February 13th, with the winner being announced on February 20th. Each island offers incredible experiences, from world-renowned scuba diving on St. Croix to the most pristine beaches in the Caribbean on St. Thomas to picturesque harbors and beautiful snorkeling on St. John. From the moment you arrive, you'll find yourself falling naturally in rhythm with the heartbeat of the islands because the weather is perfect all year round. There's no money to exchange and no passport required. Go to visitusvi.com for more information and to enter the contest. That's visitusvi.com.
Veterans benefits just got a whole lot better. Whether you're about to leave the service or you've been out for decades, the PACT Act gives eligibility for VA benefits to thousands of veterans. The PACT Act is a new law that expands benefits for veterans exposed to burn pits, Agent Orange, and other toxic substances. To learn more, visit va.gov/PACT or call 1-800-MY-VA-411. If you or a loved one served this country, it's time to get the benefits you deserve.
Life estates are not simple documents and can carry risk, including the potential for you to lose control of your estate. If you haven't done your planning yet, call Cushing & Dolan at 866-848-5699 and get your free copy of their new guide called Calculating the Consequences of Life Estates. Call 866-848-5699 or request it online at LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a guide out this month titled Understanding the Secure Act 2.0. Mike, one of the big changes in the Secure Act 2.0 is that RMD ages are on the move again. What's happening with them?
They are. So this kind of slipped under the radar last second at the end of last year, so it hasn't got as much attention outside of certain circles. But previously, RMD age was 70 and a half. It got moved back a few years ago to 72. Now they're moving it again. So for those born between 1951 and 1959, your new required minimum distribution age is 73. If you were born 1960 or later, you're now moving to an age 75 for required minimum distribution, which creates a whole bunch of new opportunities that weren't previously available.
Yeah, and certainly when you look at this, it gives you the ability to adjust and manage your tax burden longer into your retirement, potentially employing things like Roth IRA conversions for additional years than previously was allowed.
It does, yeah. So Roth IRA conversions have been a big topic in financial planning for the last few years, and effectively this just gives you more flexibility when it comes to those. Other changes regarding RMDs, you used to need to take one on a Roth 401k account. They did away with that entirely. So a lot of changes in this new bill, and we cover all of them in our new guide on Secure Act 2.0.
The guide is titled Understanding the Secure Act 2.0, and there are two ways to request it. First, you can call 800-393-4001, or you can request it online at armstrongadvisory.com. That number again is 800-393-4001, or request it at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. For your chance to win our daily trivia contest, text us at 617-362-1385 and use keyword Encore. Complete rules are available at financialexchangeshow.com. This is the Financial Exchange Radio Network.
Which actor was originally cast as Marty McFly and actually filmed a third of the movie before being fired? Well, that would be Eric Stoltz. Stoltz was fired after 6 weeks of filming, reportedly due to his unsuitably intense method acting. Michael J. Fox, who was the original choice of the producers, was finally able to accept the role because the scheduling conflict with his TV show, Family Ties, eased up. And our trivia winner today for the t-shirt was John from Yarmouthport, Mass. He's taking home the t-shirt. And the winner of the $100 gift card for the week is Dan from Salisbury, Mass. So congrats to both winners today. And trivia is brought to you by Encore Boston Harbor. Visit EncoreBostonHarbor.com and see for yourself why Encore is a Forbes 5-star award winner for both hotel and spa.
Do you want? So I was just looking Eric Stoltz up. He's Lance from Pulp Fiction.
Yeah, I didn't realize that. I don't.
I wouldn't have recognized
really
Eric Stoltz's name, but Lance from Pulp Fiction does stand out.
So
there you go.
There's a headline in the Wall Street Journal: "The bosses are back in charge."
We'll see for how long, but I actually agree. So
what's the thesis?
The thesis is there's been some big name layoffs at the likes of Google, Microsoft, not Apple, Amazon, and several others. And I think that the attitude of workers has perhaps shifted a little bit to say, okay, if my job might be in danger, I'm going to start listening and get back into the office and maybe change a little bit about how, I mean, the back to the office thing is the main piece that I can point to. We talked about how last week the Castle Systems had a record since the beginning of the pandemic of badge swipes in the offices that they manage. And I think that is I personally believe that that's the direct result of these announcements around layoffs, even though clearly in the month of January they had no net impact on jobs whatsoever. I think that there is some sort of attitude shift going on there when it comes to perception around potential layoffs and recession. That having been said, you have a few more of these jobs reports where we're adding 500,000 jobs in a month, and that may not hold for terribly long.
No, I mean, again, if you do see increased demand coming through, you're going to want more labor. And by the way, that also does match up. I know we've seen these layoffs in tech that have gotten a lot of press and everything, but the raw numbers are rather low. I mean, even if you go through all the layoffs for January that we had announced, it was 84,000 people.
Yeah, my point would simply be that they were very high profile.
Yes.
These are people making $250,000+ a year. They are at 5 of the largest companies in the world, and so that has an effect, whether or not it's truly seeping into the economy. The other piece that I find interesting is the 500,000 jobs that were added in the month of January. You're actually able to do so. I don't think the jobs that were added in the low 100 to 300,000 over the last several months were because of a lack of demand for employers. I think it was from a lack of supply of labor. And I wonder if that is a shift that's going on too, is people saying, okay, I need that second job in order to continue to make ends meet, or I wasn't working, I had retired early, but I'm coming back in because something has shifted in terms of my perception of the economy.
I saw something on Second Jobs. It did not tick up, actually. It actually ticked down for the month. So I can't find it right now, but that was not part of it.
Right. So anyway, I tend to agree that right now, compared to 6 months ago, boss is back in charge. Does that hold for any extended period of time? I have my doubts.
Ford, they They posted a $1.3 billion fourth quarter profit. Their guidance was bad. And here's the fascinating thing. They missed calendar year 2022 guidance that they had given in October by over $1 billion. How do you do that?
In October?
They gave guidance in October, okay, that they were going to see...
Less than 4 months later, you missed by $1 billion?
They laid an egg for the last 3 months.
Yeah.
And Farley, the CEO, basically said, yeah, there was a lot of stuff that went wrong here because we missed our profit numbers by $1 billion for a quarter, basically.
Do a few of these car companies fall into the same category of companies that saw a pandemic trend that is now being realized to not be so true? I mean,
no, Ford just had a badly executed quarter, it looks like. It was just they had orders and stuff. They couldn't fulfill them. So it was just something went wrong there, and I'm not sure what.
They are going to be facing some new pricing pressure. They had to cut their Mustang Mach-E price. They haven't had to do so with the Ford electric pickup truck, but if they can't get these things off the factory floor fast enough, then you can continue to see profit problems.
Yeah, it's... I think that the biggest thing these automakers may face this year, again, higher input costs as global competition returns for, buying vehicles. And it's, I think that this is something that may be underpriced this year, is this idea that, hey, Europe is not going into the deep recession we thought it was. China's emerging, and for some reason, everyone still is... Not everyone, but the market is still pricing in interest rate cuts in the back half of this year.
Yeah.
And it feels like a situation where things could get dodgy as a result.
The United States Virgin Islands and Sports Illustrated Swimsuit have partnered for the second year in a row to give away a luxury trip for two to America's Caribbean paradise. The winner can choose either St. Croix, St. Thomas, or St. John, and the trip includes airfare from the continental U.S., 4 nights hotel accommodations, ground transportation, and a private photography session. The contest runs through February 13th, with the winner being announced on February 20th. Each island offers incredible experiences, from world-renowned scuba diving on St. Croix to the most pristine beaches in the Caribbean on St. Thomas to picturesque harbors and beautiful snorkeling on St. John. From the moment you arrive, you'll find yourself falling naturally in rhythm with the heartbeat of the islands because the weather is perfect all year round. There's no money to exchange and no passport required, so go to visitusvi.com for more information and to enter that contest. That's visitusvi.com.
One other just interesting data point that's out there is when we're talking about labor, I just saw this come across my screen. The labor force participation for age 16 to 24. So high school and college.
Yep.
Okay. That hit its highest level in this jobs report since before the pandemic, February of 2020. It's back up to over 56% after dipping down as low as 48% during the pandemic. It still is in a long-term decline, but maybe we're seeing some signs that is reversing as it's moved back up even above where it was, at some points after the financial crisis. Long-term, though, late 90s, that participation rate was north of 65%. So, again, getting back to 56, 57 is fine, but it's still running well below where it was in the 90s and early 2000s.
Yeah, I mean, look, when you compare specific age groups to decades ago, you really have to factor in a whole bunch of other factors like college graduation rate, high school graduation rates, graduate school, things along those lines that have seen, larger changes over the last few decades. But, yeah.
Beyond Meat, they are bringing on a new marketing executive and trying to shift up their retail strategy
Do whatever
in order
you can,
to
folks.
Attract some sales. But we've talked about this before, that this feels just increasingly like a fad as opposed to anything else. Now, Beyond Meat stock was up 20% yesterday.
It's the marketing guy from Red Bull.
Yeah, that's pretty good.
So
pretty good marketing.
I don't think it has anything to do with him coming on. No. If you look yesterday at what we saw, the best performing segment of the market was the
fake
most
meat.
Was
very niche.
Was the most heavily shorted stocks in the market.
Yeah.
So that segment was up about 6% yesterday. Basically, it looks like hedge funds all at once, after Jay Powell spoke on Wednesday, decided to cut their short bets. And so you had this up 20%. Carvana was up 25%. It was open season for stuff that had been heavily shorted.
I like that Beyond is saying that they are focusing and orienting their retail business around just 5 major grocers, as though that's some like niche market. The 5 grocers are Kroger, Walmart, Publix, Costco, and Whole Foods.
Just mom and pop shops, you know.
That's got to be 90% of the grocery
Who's
market
mom,
right
who's
there.
pop?
Right? Like, what's left?
Not much.
No, I mean, those
Albertsons, I guess, but Kroger's trying to buy them.
I would imagine those are the 5 biggest in the country.
Albertsons might be up there, but
Maybe
I mean,
Costco doesn't quite get to that scale.
I don't know.
Oh, no, I don't know who you could be leaving off this list.
Yeah, I mean,
Maybe Albertsons.
Albertsons, which I think owns Shaw's and a few others, but there's nobody else that has that quite. I mean, Walmart and Kroger alone have to be a massive dominating factor in the grocery business.
Let's take a quick break, and when we come back, we're going to be joined by Paul LaMonica from CNN Business.
Wall Street's volatility continues as the threat of a recession lingers. Breaking business news all morning long, only here on the Financial Exchange Radio Network. Life estates are not simple documents, and while they can be beneficial in some cases, you should be aware of the many pitfalls in using them. There's the potential for you to lose control of your estate, a higher risk of income tax consequences, and hidden gift issues that can arise as well. If you haven't done your planning yet, now's the time to learn about the effects that life estates can have when it comes to protecting your assets. Call Cushing & Dolan today at 866-848-5699 and request their new guide called Calculating the Consequences of Life Estates. Don't leave your assets to chance. Call 866-848-5699 and get your free guide today. Cushing & Dolan have been helping New England families for more than 30 years. Let them help you too. Call 866-848-5699 or request the guide online at LegalExchangeShow.com. That's LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The United States Virgin Islands and Sports Illustrated Swimsuit have partnered for the second year in a row to give away a luxury trip for 2 to America's Caribbean paradise. The winner can choose either St. Croix, St. Thomas, or St. John. And the trip includes airfare from the continental U.S., 4 nights hotel accommodations, ground transportation, and a private photography session. The contest runs through February 13th, with the winner being announced on February 20th. Each island offers incredible experiences, from world-renowned scuba diving on St. Croix to the most pristine beaches in the Caribbean on St. Thomas to picturesque harbors and beautiful snorkeling on St. John. From the moment you arrive, you'll find yourself falling naturally in rhythm with the heartbeat of the islands because the weather is perfect all year round. There's no money to exchange and no passport required. Go to visitusvi.com for more information and to enter the contest. That's visitusvi.com.
The Secure Act became law in 2019, but a new bill has updated some key areas. As of January 1st of this year, it's time to take another look at how these changes may affect your financial situation. Hi, this is Chuck Zodda from the Armstrong Advisory Group. And whether it's the new age for required minimum distributions, how RMDs are affected if you have a Roth 401k account, or changes to catch-up contributions to any employer-sponsored retirement plan, we have a brand new guide called Understanding the Secure Act 2.0. This guide provides important information as to how any or all of these issues may affect your personal financial strategy. Call us right now at 800-393-4001 and request your free guide today. Or you can request it at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Veterans benefits just got a whole lot better. Whether you're about to leave the service or you've been out for decades, the PACT Act gives eligibility for VA benefits to thousands of veterans. The PACT Act is a new law that expands benefits for veterans exposed to burn pits, Agent Orange, and other toxic substances. To learn more, visit va.gov/PACT or call 1-800-MY-VA-411. If you or a loved one served this country, it's time to get the benefits you deserve.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
Text us at 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we are covering. This is the Financial Exchange Radio Network.
Ladies and gentlemen, the weekend.
The Financial Exchange is proudly partnered with VA New England. If you or a loved one serve in this country, get the health benefits you earned and deserve. Call 844-VA-CARES. That's 844-VA-CARES.
Paul LaMonica from CNN Business joins us now. We're going to talk a little Peloton with Paul. Paul, how are you?
I'm good, thanks. How are you guys doing?
We're doing well, and it seems like Peloton is doing a little bit better. At least the stock is doing better since the calendar turned into 2023. What's going on here?
Yeah, shares have more than doubled. It's pretty astonishing how well the company has rebounded. I think part of it is that we've seen this rally, writ large in a lot of the underperforming stocks of 2022. But to be fair, even though Peloton is still having profitability issues, their revenue was much better than expected, and that was, largely due to both strong sales of the equipment, the bikes most notably, as also the subscription revenue, tied to the workout classes. And so many people obviously are using Peloton so that they can have, peppy trainers shouting at them to pedal faster, I guess.
What do you make of this run-up now with the stock basically doubling off its lows? I mean, is this something where it's responsible to wave the all clear, or is this just, hey, maybe this is, not really sustainable because we're still losing a bunch of money when it comes down to it?
Yeah, the latter, definitely. If Peloton had turned a corner and was generating a profit, I think you would be more inclined to say that maybe this rally is legit and we can send out that all clear sign, if you will, and say that the company is back on the road to a sustainable recovery. The CEO has talked about it being an epic comeback, Barry McCarthy, in the most recent shareholder letter, but I think that is premature. There have been takeover rumors in the past, companies like Apple, Alphabet, Amazon, Nike, all being mentioned. That might be just chatter, wishful thinking, pipe dream type talk. Peloton seems to want to stay independent, but I still question whether or not this is a legitimate rebound. If it's a fad company that's having just a bit of a resurgence, what happens if we have a recession later this year, 2024? What happens to sales? Granted, we're now all talking about a soft landing, particularly with these jobs numbers this morning, but I don't think we can rule out just yet that the economy doesn't take a leg down and that winds up hurting this company.
So if I'm reading the data right, Peloton stock, or not Peloton stock, but Peloton the company, they're still losing money on each bike they sell, correct?
That's my understanding as well. I mean, they're not a profitable company.
So wouldn't the most dangerous thing for them actually be that they start selling a bunch more bikes?
You would argue that this is not the type of thing that they could make it up in volume,
right?
So to speak. So, I don't know if they get closer to profitability if they do sell more bikes, because they do add also the subscription revenue that comes in. So even if they're losing money on the equipment, you do have those monthly or annual checks coming in, so to speak, bills being paid for the subscription for the training aspect. But again, I just think this is a niche market and a bad company. And again, if people are more comfortable going back out into the world now that we've all pretty much gotten COVID probably at some point, and if we're vaccinated, we're feeling not like it's a death sentence to get COVID, people are going back to. And you don't need to own a Peloton if you have a gym subscription.
Yep. All good points. Paul, appreciate you joining us, and have a great weekend. Stay warm.
Thanks a lot. You too, Kat.
That is Paul LaMonica from CNN Business. Speaking of staying warm, Mike, how warm did you say it was going to be at Mount Washington tomorrow morning?
For this. Love taking a look at the weather reports on Mount Washington. So for tonight's lows, Friday night in the clouds, coming in and out of the clouds under partly cloudy skies, low falling to around 50 below, wind chill 100 below to 110 below, and wind northwest at 100 to 105 miles per hour early, increasing to 100 to 115 with gusts up to 135. So have a nice, pleasant hike. And seriously, folks, don't go into the White Mountains tonight.
The coldest I've ever been, I was maybe 13 or 14 years old, and I was skiing at Akimo. And I forget the exact numbers, but without the wind chill, it was somewhere in the ballpark of negative 15 to negative 20. And it was very windy, so the wind chill was actually around negative 60 to negative 65. And I actually skied for the morning before they closed the lifts, just because they were like, the combination of the high winds and the cold, we don't want the liability of having you people out there, skiing anymore. But it was so cold that, the feeling that you get where your feet hurt because they're cold, but then eventually they go numb?
Yeah.
It was like they never really went numb because they just kept getting cold.
It just hurt?
Like, it just kept hurting because it just kept getting colder.
I wonder if you're going to see some closures this weekend. Some ski places.
Multiple ski resorts
I'm not a skier,
are closed for the day. I don't know what you'll see Saturday and Sunday, but Cannon Mountain, for example, I think announced that they are closed for the day. But we shall see. I'm playing hockey tonight at an ice rink that famously
that rink's like partially open, kind of.
Yeah, well, that's my concern. Is when I played there when I was younger, I was playing against a team, and one of them got hypothermia and one got frostbite. So,
but the ice is good.
Good ice.
Good.
It's good
Solid ice.
It's good ice.
Any other weather topics that we want to bring up?
No, I mean, again, we've got the fake Chinese weather balloon. That's really a spy balloon that we don't know where.
We've had multiple weather topics today. That's good.
Yeah, the U.S. government has not said where it is now, but they did say they were not going to shoot it down.
I hope it's over Chuck's house.
I figure we have our own balloons, though, right? Why don't you float a guy up in it with a pin and pop it and, clip it onto our balloon so it doesn't fall onto a house? Can you just pop it with a pin?
I suspect not, but
it's the old pop and clip. That's what we always used to do back in the day. Let's take a quick break for the whole weekend, and we'll be back on Monday with more Financial Exchange.
I don't know. The Secure Act was signed into law 3.5 years ago, but as of January 1st of this year, there's some important changes.